What's up everybody? Welcome to the stock market. My name is Corey and today we saw a mixed bag in the stock market with the Dow Jones and the S&P 500 declining with the Nasdaq 100 inching higher. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY declining about 0.5%, closing below the 5 EMA and getting rejected yet again at you know where, our 441 price target resistance level. So we continue to see SPY struggling at this critical resistance, which is starting to become a warning sign. The longer it takes to break through this resistance, the more concerning this will become because it does look like smart money could be unloading their positions at this level. Of course, there's always the possibility we do eventually break through that level, but I can't stress it enough that now is not the time to be over leveraging your accounts and you should be a lot more cautious because we do seem to be losing momentum at these levels. We still do have the bull trend, but the price action is telling us it cannot break above critical resistance. So at this point, be cautious, and that 441 level is still critical resistance. If we do break above that level, it is very likely we will get to the next price target at 446 in a hurry. We still have the bull trend with the critical support at 436 and the gap close just below that. If we do lose the critical support at 436 and we break down through the gap, it's very likely we're going to retest our 50 EMA in a hurry, which is down here around 430. So below 436, you have critical support at 430. So that will be quite the falling knife if we do start to break down. Remember, we need to stay objective and we need to see the price action closing below critical support before we can say that this market is rolling over. Right now, we just see a market struggling at resistance and it still does have a bull trend. So it's still possible it can blast through that level. It's just taking a lot of time. And we don't have buyers above 441 to really push the stock market higher from here. On the Nasdaq 100 triple Qs, we were up 0.14% today, basically going nowhere, but we did close slightly above that resistance at 367. We still have yet to form a brand new all-time high, which we need to get to about 369 to do that. We have resistance at our next price target at 370, and we will need to break above that resistance right around 368.5 to get to that price target at 370. But right now, 370 does look like it is possible, and it does look like the triple Qs want to hit that level. That could trigger another pullback, or it could trigger a stock market correction. So again, remain cautious at these levels because we are starting to see the stock market seem like it's losing some steam, and we don't see buyers at these resistance levels that are going to be needed to push us higher. We still do have the bull trend, and on the triple Qs, the critical support is at 363. Below 363, you're looking for support at 360 and 358. And if we do start breaking below 363, it's very likely we could retest our 50 EMA right around 354. So watch those critical resistance levels at 368.5 and 370 and look for a breakdown below 363 to tell us that we are losing our critical support. On the Dow Jones, we see another warning sign because we do see the Dow Jones closing below our critical support at that 20 simple moving average, which is just above 348. We did close on top of our other support level at 348, which is below our 20 simple moving average. But it does look like the Dow Jones could be trying to roll over here. Remember, we want to see all three indices in bull markets and not just one of them. So we would like to see the Dow Jones remaining bullish if we still want to be bullish on the S&P 500 and the Nasdaq 100. So watch the Dow tomorrow because if it breaks below 348, you're very likely going to see it closing the gap at 348 and retesting our 50 EMA at 345. Below that, we still have support at 341. And our upside resistance is still 351, which we need to close above to get to our price target at 355. We still have the bull trend and price action is still near critical support, but we're definitely seeing some warning signs. On the Russell 2000, we see a continuation of the bear market with the Russell 2000 going down 1.25% and closing below yet again another support level, closing just below 219. Our next support will be just below at 215, and if we lose that support, we could be coming all the way back down to 209. The price action is back below all the moving averages and we still do have bearish trending. So again, the Russell 2000 is still in a bear market, which means the bears will continue to short it at resistance. So look for resistance now at 219, 220, and 222. And we need to see the bulls closing the IWM over about 223 to scare away the bears. And we have not yet seen the bulls be able to do that. So the IWM is still bearish until proven otherwise. So don't take long positions in the Russell 2000 right now because it is in a bear market, which means the path of least resistance is still lower until we can get back over that 50 EMA. On the ARKK ETF, we did have a bullish day going up 2.55%, and blasting back above that 20 simple moving average. We're back into the full bull trend, and we did close at a brand new daily higher high, so it does look like the ARKK ETF is starting to go back into a bull market. Remember, it's very likely we finished an ABC correction, which means ARKK has already gone through a correction and it's starting to go back into a bull cycle. Remember, from that high down to the low, we did drop about 13%, which does satisfy the requirements for a correction, and it does improve the chances we could be going back into another bull cycle. So right now, ARKK is looking very bullish, and we have little resistance above until we get to about 126 and 128. We still need to hold above critical support at 121 and 120 to maintain this bullish trend. So look for ARKK to potentially be going back into a bull market and continue to run from here. On the VIX, we dropped 0.28% today, and we did see the VIX closing right on top of the 50 EMA. And again, the VIX does have a full bull trend, which is still a warning sign that we have to acknowledge. We see the stock market failing to break out above critical resistance, while we see the VIX constantly forming higher lows and building up some bullish momentum. So if we do see the VIX spiking above 20 and getting back above 24, that would be a huge warning sign that we could be seeing a stock market correction in the very near future. But right now, the VIX is still below 18.2, so that is not what we're seeing, so we need to stay objective and wait to see if we do see that price action. If the VIX is below 18.2, that will favor brand new all-time highs, and the VIX above 20 will be more volatility and potentially more high volume selling. On Bitcoin, we're currently up 3.7%, and we bounced off of that support level at $37,500 perfectly. So that support level did hold up, and we never actually did retest the 50 EMA. It's too soon to say we're out of the woods just yet because we don't have the full bull trend, but we're very close to having the full bull trend if that 20 simple moving average can cross back over the 50 EMA. So this could still be an ABC down, and we're in the B wave up before we retest this breakout right around 35,500. So do stay nimble, but if you are bullish on Bitcoin in the long term, you do want to buy these dips. We could come back down to the breakout level right around 35,500, but as long as we're above that level, Bitcoin will very likely be going back into a bull cycle. Price targets above will be 43,000 and 51,000, but you will have resistance along the way at 40,500 and 43,000. It's very likely if we get above 43,000 that Bitcoin will have no trouble at all getting to 51,000. So watch that as a potential price target if we do break out above 42,300. On Amazon stock, we were down 0.34% today, and we see Amazon still holding up above our support trend line. Remember, the critical resistance I want you to pay attention to on Amazon is 3,400 and 3,500. We have a huge gap to fill that won't close until we get back up to about 3,580. And I do think this gap will get filled as long as the triple Qs remain in a bull market. So as long as the triple Qs are bullish, it's very likely Amazon is on its way to fill this gap with two critical resistance levels at 3,400 and 3,500. The critical support will be our support trend line at 3,340 and our support level at 3,311, so watch for those levels for a potential breakdown. Next up is Tesla stock, which was up 0.17% today, and we still see Tesla struggling to break and close above that 714.5 resistance level. Remember, we need to close above that level to get to our next price target in the 760s, and it's still possible we come back down and close this gap right around 697. The breakout level of support will be right around 692, and if we close below that, we still have support right around 688. So look for Tesla to potentially pull back before we see this next leg higher, but overall, this is still a very bullish chart with a full bull trend and price action well above a positive sloping 5 EMA. So Tesla looks bullish here, and it could be due for a small cool down before it goes for that next leg higher and tries to get into the mid 700s. You'll know Tesla is breaking down if we close back below about 658, so watch that critical support level closely. On Apple stock, we were down about 0.25% today, and we still see Apple holding above that 20 simple moving average at 146. We're very close to regaining the full bull trend. We just need that 13 EMA to cross back above the 20 simple moving average. So Apple will look a lot more bullish if it can break above 148, and it could start running to our price target at 156. You can see Apple is in a consolidation wedge, which is neither bearish nor bullish, it's just a consolidation. So look for a breakdown below about 143 for a bearish breakdown, and a breakout above about 149 for a bullish breakout. We still have bullish momentum and bullish trending, so it does favor the bulls that we will break out to the upside. But be cautious for the critical support at 145 and 143, because if those break down, we could be coming back down to 140 or the gap close at 137. The financial sector was down 0.84% today, but still closing above the 50 EMA. We're very close to regaining a bullish trend, so we could see the financial sector going back into a bull market. The industrials were down 1.36% today and closed right on top of the 50 EMA, and we still have a bullish trend. The healthcare sector was down 0.42% today, but still in a very strong bull trend with price action well above a positive sloping 5 EMA. The energy sector was down 2.71% today, and we continue to see the energy sector in a bear market. Price actions below all the moving averages, and we still have a bearish trend. So jumping back over to the S&P 500, there's definitely a warning sign that we cannot break above this critical resistance at 441, and as you can tell, we have been consolidating below this level. So the question you need to figure out is smart money unloading their positions at resistance, or are we accumulating below this position before we break out and start running higher? Typically speaking, August and September are volatile months, so do protect yourself to the downside and be prepared for a potential correction. Remember, to be objective, you need to wait for a price action close below critical support at 436, so don't just assume we have to go through a correction. Wait for the confirmation and manage your risk accordingly. There's no reason to stop being a bull as long as the market is still bullish, and right now we still do have a strong bull trend. If the price action breaks below critical support, the bull trend is out the window and you need to start managing your risk a lot more tightly. So pay attention to these critical levels and understand the market could start getting very volatile if we do see that VIX spiking. Also remember that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions. Typically speaking, you'll get a lot more trade alerts during a volatile market, so if we are going into a season of volatility, BANC Trade Alerts should do very well. You get all the buy and sell alerts directly via email and text message, and all you have to do is execute the trades yourself. I'm currently running a 50% off coupon code for your first month, so now is the best time to try BANC Trade Alerts. You can find out all of the details on how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the links below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.